Alrighty, what's going on, everybody? Let's get started. Let me move this over and hold on. All right, cool. Let's do it. Let's take a look at it. And all right, just so that everybody's on the same page here, we've got 5 people on the call. So I'll tell you right now, I'll give it 15 minutes, but yeah, if we don't get more people that hop on, man, like I'll tell you right now, like I rushed my butt home from the gym to get on here, and I could have easily stayed at the gym and finished my workout. So, nothing against everybody that hops on, but it's just not worth it for me to do this every week anymore. So like I said, I'll give it till 4:15. If for whatever reason, we get more people on, great. If not, this is like the third consecutive week where we have less than 10 people on the call. So I'll go and do it like once a month, man. Yeah, man. However it works, bro, but it's a waste. Honestly, it's a waste of my time. It is what it is. I've got so many things going on that, I had to squeeze in my gym workout because I was busy all morning with crap. So it is, I mean, again, it ain't no big deal, man. But all right, let's jump into it. Let's see. Hold on. All right, cool. So this week for news, we got a little bit of U.S. news coming out. A little bit of there we go. A little bit of U.S. news coming out. We got some inflation data coming Wednesday, right? I would imagine that we're going to see some pretty decent movement on the dollar, specifically to the downside. And that's kind of still the bias for me is dovish dollar. Everything is leading into the following week's FOMC. So that's kind of where I'm going to be with this, right? Inflation CPI is coming out Wednesday. We got PPI Thursday. Typically we have Friday PCE, but that's rolled over into the following week, right? So the biggest thing I'm going to be following on the dollar side is going to be CPI and PPI. And then in between the two, we've got ECB coming out with their rates, right? And you can kind of see that they're calling for a pretty aggressive rate cut. If that's going to happen, if they do come in at 3.65, I would imagine that we're going to see a momentary shift for Thursday on the euro, specifically dollar and euro, right? So, we potentially are going to see euro USD. We're potentially going to see euro USD go somewhat bearish if this comes in at 3.65. But it's only going to be realistically, it's only going to be probably for maybe that 4-hour window between 8 and like noon. So we'll see. Ultimately, it's going to be whether or not they're going to come in with that huge rate cut that they're anticipating, right? If they don't, no big deal, So we'll see ultimately how this plays out. Okay. But yeah, my bias is still dovish dollar, long-term dovish dollar, without a doubt. All right. Coming over into, let's see the charts. I haven't even opened the charts yet this morning. Let's just see where we're at. Anybody catch any decent moves on EU and GU last week? They bought really well for the week. So I know I took some decent buys out of them. And yeah, we'll kind of cover some of that stuff real quick. So let's go over to the dollar real quick. Second here. All right. So on the dollar side, here we are. Ultimately, this is my anticipation, right? Continuing for that ultimate redistribution that we're looking at. For the most part, all of last week, we sold off pretty nicely. We did not break the low. That's still what I'm waiting on. And ultimately, the overall redistribution is kind of where I'm aiming for this, right? Looking to see if we can get this massive push to the downside. I'd like to see it build something out here. This is really where I'm looking for this week for us to get sells in. If we're going to sell off, it's going to be from here. If we're going to have to if we're going to have to wait for price to get up here around like the 102,800 level, yeah, it ain't going to happen. We're going to have to wait till after ECB news on Thursday. So, and I really don't want to buy the dollar. For me, it's not advantageous for me to do it. So, last week where we were, I was anticipating this continuation move to the downside. We really, really did a good job of seeing that come down. This is actually just from Friday close into Sunday open, where we saw price kind of just take its way back up. But I'm pretty happy with last week's price action. The biggest thing for me is whether or not now we're going to get the evidence of sellers, and looking at it from this perspective here. So looking at it from this perspective here, I'm not seeing a great deal amount of sellers quite yet. Yeah, I would want to see us really, really drive into this distribution up here, right? This is going to be where I'm looking for. And ideally, like the 50% of this whole thing sits like right in here. There we go. So I would imagine that over the next 12 hours, I'd like to see, potentially maybe this is one drive, this is two drive, here's our three. If we can get one more push to the upside, potentially even play into here, right? We had a really nice redistribution in here. This would be a nice ideal area to really come into play. And that's where I'm going to be really looking for the shorts on the dollar. Let's just see if we get confluence in this. Not really. I mean, this is ideally where I'd like to see the dollar play into. I'm actually going to move my alert just a little bit lower. I'd like to see if we can get dollar to really price into this, right? So that's going to be where I'm looking for. And for this week, my targets are going to be to take this bad boy on down and break the low from Friday's low, right? News, that's what I want to break. And that would confirm the redistribution. So how does that kind of look on the euro? So yeah, we'll backtrack here just a little bit. There we go. So last week on the euro, right, I was kind of looking for price. I really wanted to see price if we can come back into here, or if we confirm this as an accumulation, I wanted price to come back into my SC or into my extreme, which is sat down in here, right? We kind of just did, we did ultimately just that. Looking at last week's price action, looking at where we are today, we are right in the middle of where I wanted price to come into. All right. Last week's price action, I did catch a nice little buy on Thursday. Actually, lately Thursdays for me have been just smoking hot. Ended up catching these two buys down in here. If you haven't back tested them, go take a look at them. They were pretty clean. So I got screwed by my broker on one of them. I didn't get filled on the 50% entry, so I only got in on the buy stop. But that gave me a 1 to 28. And then the other entries were a 1 to 16 and a 1 to 28. So, I ended up closing out everything just because Friday was NFP. I didn't want to deal with, especially only being up like 40 pips. So I ended up taking a little over 2.1% out of this on $50 risks. So I was pretty happy with the R to R on it. But now where does that kind of leave us? That again, that kind of leaves us in the accumulation that we built last week. And you can ultimately see where we're at. I mean, we're accumulating in it. So it's just going to be waiting now to see. Let's just see if we can validate this. Hold on. Can we validate this? So we know the dollar is not in an active, clear, clean, organized distribution. So now the question remains is this enough? And I mean, technically it is. Hold on. Got a little bit of a Pac-Man going on. We have enough drives. You know what? I'm going to box it out. For me, like if this was price action going into London Open right now, I'd be ready to buy it as it stands. But I would imagine we're going to get some kind of manipulation coming out of Asian. So for me, the question is going to be whether or not we are in phase C yet. And I'm not prepared to say that we're in phase C quite yet. We could still actively be in phase B. So we do have a valid accumulation sitting in here. So we do have a valid accumulation sitting right in here. And if price tonight ends up just kind of dragging through here, right? So we just sit right in here and we get the sweep at Frankfurt or at London Open. That magic hour is where I'm looking. If this presents a micro, I'm not going to be up for it, but if I was up for it, I'd be looking to take the micro. And if, obviously if I wake up at New York and we're up here, I'm simply just going to wait for the break of the high. And then my game plan is to play reaccumulations up. If the reaccumulations don't happen and we end up distributing after breaking this high, then I'll just look for mitigation of this move here, right? That'll be my game plan. But I like the point of interest we're in. Everything for me kind of lines up pretty nicely. It's just going to be a matter of, will price give me the confirmation of either whether or not we're in a type 1? Because right now, we're kind of just stuck here making higher highs and lower lows. So we don't have a true major sign of strength quite yet, right? And we could still get a shakeout. So if the shakeout happens, like I said, if Asian kind of just trickles in through here and we get that Frankfurt or the London sweep, yeah, that for me will be a complete, that'll be a complete cause for me to take buys, and then ultimately, looking to take it to the upside is where I'm going to be going with it. So EU for me, clearly in a nice organized accumulation. Unfortunately, dollar is not quite yet, so we may have to wait on dollar, who's lagging behind. But yeah, that's my game plan. And if this ends up coming lower, right? So if we end up taking out this accumulation right here, we've just made a massive redistribution, right? And if that's the case, now I'm going to have to sit back and just wait for price to either do one of two things. We're going to need to come back down and mitigate this news candle right here. So I would need to see accumulation right where my green box is, or I would need to wait for us to take out this high, because this would be maintaining the down cycle. So I would need us either to come here, or I would need us to break the high if we don't come into the point of interest. Yeah, so that's kind of where I'm sitting with EU. I'm either going to play order flow, or I'm going to play point of interest. But I do like where we're at, and hopefully we can get Asian to kind of build something out for us, and then Frankfurt sweeping it, or like I said, that London Open candle to sweep it. So that's going to be ultimately what I'm looking at from EU. So on GU, let's just see, on GU, all right, so where are we on GU? Nowhere quite yet. Yeah, we broke an order flow. Hold on, let's just do this for a second. We have broken order flow, and we are nowhere close to a point of interest. We're about 230 some odd pips to like my first POI. This will be probably the area here or here where I'd be looking for GU to come into a point of interest. So what happens if she doesn't, right? So if she doesn't come into a point of interest, what I'm going to be looking for is I need us to be in the upcycle of the market right now. So this is NFP Friday, right? We ended up distributing out. The one thing I'm going to be looking for is I need us to at least break some level of supply, right? Going back to last week, what did I want to kind of see? I wanted to see us when we started accumulating in here. I wanted to see us continue that move and get above the high, right? So this gave some pretty nice plays. we caught entries in here, we caught entries in here, we caught entries in here, caught entries in there. So last week the buys just came in really, really nicely. For me now, I would need to see, I would need to see some level of supply getting taken out. And if that means that price accumulates where we're at, so that being our 1, 2, 3, same thing, maybe we get the fourth drive and do this. Could this be our shakeout in a larger reaccumulation? It can be, right? So before I even think, is this my shakeout? I need this thing up here to confirm for me that sellers are in the market. So if I can get confirmation from the dollar that sellers are going to drive the dollar lower, then and only then will I be able to take a potential shakeout off of that type 1 accumulation that we get. Because for me, we're not in a POI, right? So no POI. Really, there's nothing for me to do with GU, quite honestly, yet. Now, if I don't get the type 1, so if I don't get the type 1 here, but we do accumulate, I'm going to need for us to at least take out this very disorganized redistribution, because this will be this is the first level of supply for me. And at that point, if we end up reaccumulating and taking that out, yeah, that's going to be what I'm looking for, if I can get price to break that high, then we're at that point in an accumulation, a reaccumulation, we're in the upcycle, and I'll be looking to play mitigation of that to take it higher until we get up into this supply point, because this is ultimately what's maintaining the order flow currently right now. All right. So GU is going to be, I'd prefer, honestly, I prefer EU a whole lot better right now, unless the dollar has something to say about it. If the dollar really changes its tune, at that point, yeah, that's where I'm going. So we'll see. We'll see how this plays out. But like I said, last week, GU gave some really, really nice price movements throughout the week, really nice, decent buys. Now, what happens if we don't do that? What happens if we don't break this high, or we don't confirm accumulation down here? Like I said, I've got to wait for GU to come down about 230 pips. And for me, I already know, looking at the calendar, I already know it's not going to be worth it for me to try to sell it down, because we've got realistically, we've got 7 trading days before FOMC. So in 7 trading days, I don't feel like we're going to get that. So, so we'll see. We'll see how this plays out. Like I said, GU for me, I want to see if we can get those confirmations, and then I'm taking it to the upside. If we do end up coming in with an aggressive rate reduction from the Fed on FOMC Wednesday, GU is going to skyrocket. GU is going to skyrocket. EU is going to skyrocket. All right. So that's EU, that's GU. EG, like I said, man, nothing's changed. I'm still bearish on this, but it's nowhere near anywhere I want to sell from. So, and we can see, I've talked about it from in here, and I've talked about it here. This just isn't giving me anything I really want to play. Until we either break this low or we come back up into here. That's going to be, really the 2 points that I need to see something happen on EG. Outside of that, I'm not interested. This is somebody that wanted to sell it out of here, and I quickly gave my 2 cents on it, just kind of saying, why didn't we break the low? Why are we accumulating in here? And why is this looking like evidence of buyers and not sellers? So clearly we've seen how this thing has just taken the high. So I'm kind of just sitting back. I'm not really actively following EG for the most part until one of those alerts goes off for me. And then UCHEF. Now UCHEF's the other one that we've been catching some pretty decent moves on. For me, the big thing I'm going to be looking for is, okay, so we know our leg is being maintained from up here, right? This is the order flow leg itself. Now will I play out of here? And my answer is yeah. I'm aggressively going to be taking shorts on UChef. There's really no reason for me not to. This year alone, UChef's paid me out some pretty decent profits. I'm still holding all the positions from July. These two from July, the one from August, which was in here. So yeah, I'm not doing anything outside of I'm not going to be doing anything other than be aggressive on UChef, just because like I said, we've got limited time before the Fed does their rate cut. And at that point, if we wait for the rate cut, you're going to be way too late. So I did take a loss. I did take a loss Thursday on UChef out of here. I tried a couple attempts at selling. And the only reason I was really aggressive with it is because of the day before catching the short from here. So, I ended up taking profits with Friday's news. This ended up being a 1-18. So I made back all of my losses and then some. So now the question is, where are we going to come into? And for the most part, I feel like this has already been mitigated out of here. So it's going to be realistically, it's going to be, are we coming back to mitigate the redistribution? What I like to see again, if we can get this to kind of, if all the stars kind of align the way I want it to, if we start to see the dollar really follow suit, showing us the weakness, if we see EU and GU starting to accumulate in those points of interest that they're in right now, that would ultimately lead us into seeing price distribute here, right? If you follow how UChef has really sold off all the way back from the early summertime, it's taken a couple of days to get it going, but once it starts to get really organized, you just follow the order flow, right? Follow the market cycle, the redistribution's down. If I miss the original accumulation, no harm, no foul. If I miss the original distribution, no harm, no foul. I'm going to follow through with the redistributions. So where she's currently sitting at right now is a pretty valid area. I'd like it to come up just a little bit higher. Could we come all the way back into the extreme of this? Could we come back up here? Absolutely. Right. So for me, it's, if this gives me confirmation to play the distro, I'm going to play it. I'm going to target a new low. If we don't get that, then I'm going to wait for price to just come up higher. Potentially, this may be something we see with like CPI. Maybe Wednesday we end up here. And then in that case, I'm going to throw a little bit of risk on the reversal. But once we confirm the down cycle, let's say we do come up to like the 85-200 level. I know that shooting down to about 83-700, right? I know I've got pretty good distance on, especially for UChef, right? UChef, I mean, doesn't move 80-90 pips in a day. That would be way outside of its character. So understanding that I've got 150 pips to the downside, I can move at least. I know that potentially coming into Wednesday's price action with CPI is what's going to really be the driving point on what UChef's going to give us. So ultimately, that's where I'm following. Like I said, I'm going to have eagle eyes on EU, GU, and UChef. Nothing really changes. Last week, between the positions that I took, I ended up just over 2.6% for the week, which was for September. September is normally one of the 2 months that I get really, really short-ended profits. So for 2.6% in September, I was pretty happy with it. If that's actually how I finish September, I'll be happy as well. If I don't make any more profits the rest of the month outside of last week's. So I am going to be looking to see if CPI is going to kind of give us some help. Understanding that, we have Wednesday CPI and Thursday PPI, right? Those are really the main metrics that are going to be into the FOMC's debate / voting thought process, right? We all know that there's going to be a rate cut. Question now is how big of a rate cut, and, for a while there, the 25 basis points was definitely something that was widely accepted. They started even calling in now a 50 basis point. And with most recent NFP numbers and just how how labor is really just kind of um, falling by the wayside, we may even potentially see 100 basis points, right? I'll tell you right now, the 100 basis points is going to be difficult to try to navigate because, yes, that is going to be extremely dovish on the dollar. However, it's also, well, for currencies, it's going to be pretty easy to play, right? EU and G are just going to skyrocket. The problem with indices is it's going to be looked at as a fear tactic response, right? So that's going to kind of incite a little bit of fear in the US economy, which, rate cuts on its own outside of the normal market condition cycle, right? Outside of our, we know that we're coming off of inflation being astronomically high, and now we're coming back to some normalcy. That's still very prosperous for U.S. economy, right? So indices are still gonna thrive from rate reductions. It's a different tone when you're saying that you're rate reducing because unemployment is getting out of control. Now that kind of starts to instill shock and fear into the US economy. Indices are not going to tolerate that as much. So we may see a pretty decent sell off on indices based off of fear factors for that. So that's kind of where I'm looking at it. What's your max risk you'll risk in a day? 1%. Yeah. If I lose 1% in a day, I'm done for the day. Yeah. And I'll never have more than 1% of open risk out. So if I'm stacking positions or if I'm taking multiple trades on different assets, yeah, I'll never have more than 1% in total risk. All right, cool. So that's currencies. That's what I'm kind of looking at. I am. Yeah. Does anybody else have any other currencies they're potentially looking at? Nothing. Cool. All right. Indices. Let's take a look. So I know U30 definitely gave a U30 definitely gave like a 700 point move today, man. I did not catch any of it today. I didn't even open the charts, but she accumulated pretty nicely on Friday. Friday at the close, she accumulated. We have not broken the high quite yet. So where the hell are we? Let's just see. Let's clean this up for a second. All right, let's clean this up. So we know we have an active distro. We know we have an active distro. How are you thinking liking the BT? Or I haven't looked at a Bitcoin chart in a long time. You think we can work down to 45K? Or I don't know, man. I haven't looked at a Bitcoin chart in a long time. I mean, I don't know. I don't think we're going to react off of anything. I think we're just going to reaccumulate. Yeah. I would imagine they're just going to, at some point, whether it is down here or not, they're just going to take all of this out. I mean, this to me is being built as a path of least resistance so that they can realistically, I'll tell you what this looks like. This looks like just people trying to sell positions. I know I sold some Bitcoin. When did I sell some Bitcoin? I sold some Bitcoin maybe here, somewhere in here. I know it was above 62. So it had to be somewhere like in here. I sold some Bitcoin. Sold Bitcoin just so I can buy some other stuff. But yeah, I don't know. I mean, I don't know how much they're going to want to drive this down. The problem you're having right now, man, is capitulation by miners. So it's costing a crap ton of money for miners to continue turning on or leaving on their miners, right? Electricity costs are kind of ridiculous right now. And like I'll tell you right now, me personally, I've turned off everything I have. I don't even have CPUs running right now, just because my power bill is out of control. I'm paying almost, well, I was paying almost $2,500 a month, and that's with solar attached to my house. So I don't have any crypto miners currently mining right now running at all. And I know for the most part there's a lot of people in the same boat. So yeah. But yeah, couldn't tell you, man. You're looking at AU. What are you looking on AU for, bro? What do you got on AU? Let's go back over here. What you got here, man? Even if EU sweeps the low, would you still look for buys? If EU sweeps the low, would I look for buys? Um, so I guess the question would be, what would be the reason for me to look for buys? So there's a couple of scenarios I'm already thinking about in my head. If EU sweeps that low, would I look for buys? How come? Why would I look for buys? Is this the low you're talking about, right? Or are you talking about this low? No, you're talking about this low over here. All right. Well, so that's even a different scenario, right? So if EU sweeps this low, am I looking for buys? The answer, yeah. Why would I give me a thought process on why I would look for buys on EU if we sweep this low? So if EU sweeps that low, give me the thought process. What do you think? I'm not sure, but I just know we're cutting rates. Yeah, I mean, so if you already tell yourself you're going to be aggressive, sure. I mean, my problem is this: if we break this low right here, we have now confirmed a distribution and we've confirmed a redistro. So we are now in the down cycle of the market. And at that point, if I'm in the down cycle of the market, but I'm bullish structure, I need to wait for price to do what? To come into a POI. So for me, you know, the last, so you had a reaccumulation, you had mitigation, and then price kind of went up from here. So I would need us to come back into this price action here. And that's even that's a weak point of interest, right? I would need us to come into there. And I would now need to wait for an accumulation. So if we sweep this low, you know, I've already got it in the back of my head that we're in the down cycle of the market, right? From the redistro. We're not in a really clean POI. Cleaner POI is going to be lower. So, you know, would I look for buys? Yeah, I mean, the answer is I'm going to look for buys out of that, or I got to wait for this break up here if we sweep that low. Unless dollar gives me something different. If dollar gives me something different where I'm in a POI, or dollar has not broken the high, right? The inverse of this, then I'm going to have to take it on off of that scenario. So, but yeah, that's how I'm going to look at it. Anybody else have anything else before I jump over to indices? Yep. Nothing. All right, cool. Take a look at indices real quick. All right, so we have distributed. We're nowhere near point of interest on U30. Absolutely nowhere. But my 100, like, I have no doubt that we're taking this high very soon. So where does that kind of leave us? Well, easily if we take this high where this alert is sitting, for me, we've broken the down cycle of the market. And at that point, we've accumulated, ideally, I'm guessing the reaccumulation was New York Open. I'll look at it in a sec, but that looks like New York Open. So if we end up doing this, right, and that ends up being power hour, I don't know quite yet. I'll look at the time, but if that ends up being power hour, what I'll be looking for is mitigation of power hour going higher, or just play reaccumulations. So let's just see where the heck is all of this. So that is the open. The open is right there, 9:30. And is this power hour? Yeah, that's power hour right there. Okay. So yeah, I mean, how I would be looking at this is this as one large accumulation, right? Just so if price can give me that, if price can give me this break right here, I'll be looking to play reaccumulations up. And ideally, it's going to be the same. I mean, just like what you see here, right? That reaccumulation, that's the ideal reaccumulation. Wait for 9:30 and wait for the sweep. Once it sweeps the lows, look for buys and take it to the upside. I have no idea if there was an entry this morning, but we can look. Awanda's broken. Well, I don't care about Awanda. The only thing I care about is futures. So did futures break it? No, futures didn't break it, bro. So market hasn't broken it. No, I don't want to do that. It's primary. All right. So yeah, I mean, this is ideally the scenario that I always look for in the morning, especially in continuation plays. You've got your distribution leading into, why on earth do I not have why do my things keep deleting, man? All right, I guess I'll have to put them on there. So we have our distribution, right? There's the opening. That's actually the open right there. So what do we get? We get the distro that sweeps out, and from there, immediately buyers coming back in. And then here's your SC, right? That causes the break. So I wonder, was there an entry this morning, especially out of that slingshot? Let's just see. No, it doesn't look like there was an entry. I mean, you could have taken this entry right here out of this reaccumulation, because this is actually what causes the break. It looks like. Yeah, it is. Is that more? If that's more than 30 points, though, I wouldn't have taken it. 28 points. Yeah, I don't know. I don't know if I would have taken this. I would have probably had a limit on the 80, and that was it. But this is ideally this is the game plan that I would be looking for tomorrow. Is if we break this high, we break that high right up here. Look for continuation move after the open. I wouldn't imagine we're going to get a deep pullback. I mean, ideally, if we do break it, this accumulation is going to be holding. So obviously, coming back into this right here is going to be the most discounted position you can probably get. I just, outside of CPI and PPI helping that, I don't see a reason for that sell off. I feel like price is just going to continue to the upside. Let's just see what old SPX has done. So they all did on Friday the same accumulation. And same thing. Like I would need to see this up here get taken out. Let me just put this up here so I know where that zone is. And same thing, like if we end up coming into the open, right, it's kind of hard to talk about where price is going to be at the open, right? I can tell you that if at the open we break the high, I'm playing continuation moves. If Well, I mean, we could clearly see the accumulation here. We could see price really doesn't give anything going on until New York Open, which is here where it reaccumulates. So for me, New York Opens right now, we're in the up cycle. Um, if we are distributing up here, right? Let's just say hypothetically we're distributing up here and now we've come back and now this is power hour, right? This is the accumulation during power hour. If we're distributing and now we start to see evidence during New York Open of accumulation coming in, I mean, I'll tell you right now, I'll be looking for that buy to then target and take out that high. I mean, that would be probably the scenario I could see playing out. I don't know if we're going to really have a reason between now and New York Open for us to break this high. I feel like it's probably going to be New York Open that breaks the high, somewhere in that first hour of New York Open. So yeah, I mean, SPX, I'm not looking to short this, this for me is, yeah, this for me is still very, very much a buyer's market. Um, and I'm going to be looking to take it to the upside. So, we could have already potentially during power hour mitigated out, that reaccumulation. So now the question is, do we come back to mitigate that before going higher? And that's going to be where I'm going to be looking. You see what old NASDAQ is doing. Yeah. So NASDAQ and SPX are moving. So tech is really driving the S&P 500. And yeah, I mean, it's going to be the same kind of play, what I'm going to be looking for between the two. NASDAQ's come back down pretty nicely into some good discounted rates. Obviously if we end up coming one more leg lower, I mean, this to me is money. I've been waiting on this for a while. And then working this up to get an all-time high. NASDAQ's, I think I take it back. I think SPX didn't cause an all-time high yet. I think they came within like 4 points. But U30's made an all-time high. I wanna start targeting NASDAQ all-time highs. This week we had Apple come out with their stuff. So we should have some decent rallies in tech this week. I haven't looked quite yet on what tech did, how they closed. No big changes. AMD and Amazon are up a little over, almost 3 and 2%. Meta's at just under 1%. Google's down, but I know Google's dealing with the whole antitrust. Nvidia recovered pretty nicely, 3.5. Yeah. And I'm curious to see how pre-market shapes going into tomorrow morning, but I am going to be looking for buys. For me, it's still very much a buyer's market, and I'll be looking for those continuation moves to the upside. But yeah, I mean, for the most part, that's what I'm looking at. Nothing's changed. It's going to be USHEF, GU, and EU are the currencies, and then just US indices is what I'm looking at. And then just see if we're going to get help from CPI and PPI. So I would imagine that CPI is going to come in at that point too. I mean, they're calling for a 2.6 on the year over year. I think that's probably where we're going to get the manipulation, because I would imagine I don't know if we're going to see 2.6. I mean, we've slowly been going down, right? We could see it slowly been going down. Before the forecast came out on Friday, I was kind of anticipating that they were going to be looking at something around like 2.8. But 2.6 is maybe where they're going to get screwed up on the CPI year over year. And that's where we could see, price kind of come back and give that manipulation of like a UTAD on the dollar before the major sell off on the dollar. So CPI and PPI are going to be my main focal points. And then whatever the ECB does, like I said, this is a pretty aggressive rate cut. Um, it's definitely going to be Wednesday, Thursday are going to be the 2 days where I feel like we're going to get heavy manipulation. Um, but I want to be positioned in hopefully before Wednesday and then kind of just guide it through. Um, and then just do like I normally do. If I can get some decent profits going into Friday, take some off the table and roll into next week. But next week's going to be the big one. Next week for me is going to be, oh, there we go. Next week for me is going to be very, very big come Wednesday. So I honestly may not even, I may look for quick little trades on Tuesday, and I may not even trade going like Wednesday. I may just sit back and wait, let everything, the dust settle and do it. So, um, the forecast for forex.com and investing are different. All right. So which one do you want to go with, bro? Yeah. Which one do you want to go with? The less aggressive one? How come? What's the reason that they're for the rate cut to be cut that low that quick? I don't know. Yeah, I don't know. I guess that's my question to you. How come? So, I mean, I know where Forex Factory gets their forecast from. So where does investing.com get theirs from? Mm, so let's see how the heck do I get over to Tuesday? Man, this has got all kinds of freaking crap, man. Look at this stuff. How the hell do I get all of this crap to stop opening? Let's see. All right, so let's go to tomorrow. No, we need to go this week. So it's more about source. Well, I mean, source is important, but I mean, let me ask you a question. Why do you believe investing.com over forex.com? Like what have you done this week to hear about the forecast? Because I'll tell you right now, if you listen to Bloomberg yesterday or today, they talked about ECB coming in with that potential forecasted rate cut. If you listen to Yahoo Finance, analysts are talking about that as the potential forecast. Like I just don't know, like what other source other than investing.com have you heard of or read about or looked at and has kind of told you that yeah, the forecast is actually higher than what Forex Factory is doing. And I don't know why this website is acting all crazy, man. Yeah. So what like because I just don't know anything. I haven't looked on this investing.com. When you looked at ECB rates and forecasts, what are they, what's your impression of it? I can't even navigate this damn thing. I don't know what it is. You were looking at the last CPI data. Okay. About, and what about that? Dude, I'm gonna have to get off this website, man. It is wreaking havoc. Like, look at this. I can't do anything with it. There we go. Finally. I was thinking that there shouldn't be a reason for them to but aggressively cut rates until they reach below 2% for CPI. And how come? What makes you think that? What is the biggest reason for rate reductions from an economic standpoint by a central bank? Is rate reductions a necessity when they reach the targeted 2%? Like what does that kind of give you? And what is the main reason for rate reductions? So like take for instance, let's look at ECB, right? We're talking about the ECB. What's the ECB's main reason for cutting rates? Yeah, I'm still, what are we, like 5 minutes in? I still can't get to this stupid ECB rate. Oh, come on, man. To get CPI to get it to a more manageable percent. So the reason for rate cuts is to get CPI to get it to a more manageable percent. No, rate cuts have nothing to do with inflation. Rate hikes have everything to do with inflation, right? A central bank's only got two ways to implement monetary policy, right? Controlling the supply of the actual currency in circulation, or by rate decreasing or raising rates, right? So they raise rates for to tackle inflation. That's exactly what it is. By them reducing rates, it does. I mean, if anything, it's going to raise inflation, right? It doesn't do anything to decrease inflation. So what is the reason that we are seeing the ECB needing to cut rates? All right, now I can move it. Let's see. Thursday morning, was it like 8:15, right? What are you talking? I thought you said that this was different. They're forecasting here 3.65, man. Yeah, it's the same. 3.65, bro. Well, all right. Everybody's been talking about 3.65. I started reading stuff yesterday that was talking about 3.65 for ECB. So, yeah, start reading some stuff or listening to some stuff, man. For me, it was all in listen. Yeah. I'm running out of time, but it has nothing to do with inflation. It has everything to do with labor, man. Unemployment is kind of getting out of control in the Euro Union. So this is why they're talking about an aggressive rate reduction. It's the same reason why the Fed is potentially looking at a very, very aggressive rate cycle for quantitative easing, is because unemployment is creeping up faster than expectation. It has nothing to do with inflation at this point, right? The inflation data, as long as inflation is continuing to roll down the mountain, right? There it's perfectly accepted to anticipate it. If they wait for inflation to get to 2%, they're 3-4 months already behind the eight ball, behind the curve, right? So what they have to do is they have to sit there and they have to anticipate, okay, where are we going to be at a 2 week, at a 2 month, and a 2 year perspective percentage rate. Yeah. But yeah, it has everything to do with what's going on with unemployment right now and the labor force. So yeah, I would. I would be very, very, I would be very, very surprised though if they come in with that 3.65. I don't know. I don't know if they're going to do it. Um, Lagarde is not, Lagarde is not one to stand out there on the podium all by her lonesome and try to justify why an aggressive rate cut. Because again, a 3.65% from 4.25 is going to instill a little bit of fear. So, I don't know. We'll see. I mean, I can tell you that if they do come in at 3.65, we're definitely going to see a little bit of a shift on the dollar. But yeah, yeah. NAS is coming into 50% of the reaccumulation. Um, the 50% of the reaccumulation. Wait a minute. As is coming into, yeah, I mean, are you talking about like it already came into the 50% of the, are you talking about this? Yeah, man, we talked about that already. Yep. I mean, that's where I think we're, that's where I think we're going to come into if we end up New York tomorrow. That's where I'd like to see us. Yep. Yeah, power hour drug this up, man. It was nice. Um, cool, bro. Yeah, yeah. Yeah, I typically don't play anything on Mondays, man. For me, it's a waste of time and money for me on Mondays just because I could definitely be doing other things, but yeah, I mean it's clean. That's a super clean play and it let's see, did she give you an accumulation during power out? Yeah, she did. Look at that. She gave you two entries. She gave you two entries. So what are we talking about off the buy stop? Buy stop. 36 points ain't gonna happen. But yeah, she gave you off the 50. And then she gave you off the accumulation right here. That you could have taken the 50 and the 80. That would have been, let's see, what would she have done? She would have done, let's see, it's that high. It's, yeah, 1 to 6. Indices, I take 1 to 5. So 1 to 6 will work. That's a 1 to 12. And that's a 1 to 32. So, I mean, heck, even, let's see, if I would have split this would have been 62.50. And then, let's see, off of that, I would have gone 50-50. So, yeah, I mean, you're talking, so 379, 605, and 1605. So let's see, that is 2210 and then 379. That's, I mean, shoot, that's right around 2.6% right there on what's that, a total of 125 and yeah, yeah. So I mean, at most it would have been a $250 risk. I mean, you don't get filled on the 80, so that risk didn't apply. And here I would have only thrown 100 each. So 50 on each, right? 50-50. So for 2.6% on a Monday, that's not too shabby, man. I probably would have looked if during well, this is power. This is getting to the end of the day, but yeah, pretty clean. But cool. Yeah, yeah. I do have to run. I've got to go. Got to go pick up somebody from practice. So, but yeah, I mean that's pretty damn clean. You probably had pretty good divergence. Let's see. Yeah, yeah, good divergence too. Good relative strength divergence right there. Oh, well. All right, cool. Well, listen, I'll catch everybody later. I've got to run real quick. But yeah, I'm going to continue to look for those continuation moves. I'm continuing to look for dovish dollar. And yeah, I mean, hopefully understanding that CPI is going to be Wednesday morning is probably going to be where the big movements start. But going into like the next 12, 24 hours, I'm still going to try to position in on those. Anyone have any last minute questions? Cool. Awesome. Well, guys, I will catch everybody later. I yeah, I mean, I'll look. I feel like I'm not gonna be able to do the call anyway on Monday, just because I feel like either my son has a football game or we have an away volleyball game. So but cool. Thanks for hopping on, and I'll catch everybody later. You guys have a great one, man.